Step 2. The costs of buying a home. In this section, we will look at how we can understand the costs of buying a home. Upfront costs for a new property. Let us have a look at the upfront cost components for a new property. Option fee. The option fee or booking fee is part of the down payment and is payable to the licensed housing developer or seller for an option to purchase. It is set at 5 to 10% of the purchase price of the residential property and must be paid in cash. Once a seller has granted the option to you, they cannot grant another option to another buyer until the option granted to you expires. Next, we will consider the down payment. This is the initial upfront payment, which is a percentage of the purchase price or valuation, whichever is lower, to finalize the transaction. The down payment minus the option fee is paid after exercising the option to purchase and signing the sales and purchase agreement, and is payable in cash and/or CPF. It is typically between 10 to 20% of the purchase price. Next, we will consider legal fees. If you are buying a private property, you would need to engage a lawyer to advise you on the process and to handle the necessary legal work to transfer the ownership of the property later on. This is known as conveyancing fees. Regardless of the type of loan and type of property you choose, you can use your CPF savings to pay for the legal fees. HDB also provides legal services at a fee when you buy a HDB flat, sell your HDB flat, or take up a HDB housing loan. For an HDB flat financed with a bank loan, you can choose to have HDB or your own private lawyer provide the legal service. You may estimate the legal fees chargeable for your HDB transaction from the HDB website. Next, we shall consider the stamp duty or stamp fee. Stamp duty is a government tax imposed on you when you buy a property and take up a mortgage in Singapore, and when you sell the property within 4 years of its acquisition. It is a tax on commercial and legal documents, and not a tax on transactions. CPF savings may be used to pay the stamp duty, regardless of the type of loan and the type of property you choose. Upfront costs for resale property. Here are additional upfront cost components for a resale property. We will consider cash over valuation or COV, cash over valuation. Cash over valuation is the cash payable when a buyer agrees with the flat seller to buy the flat at a price higher than the market valuation of the flat. It is negotiated between the buyer and the seller. There could also be no cash overvaluation component, and the transacted price may even fall below valuation. Next, we will consider the valuation fee. When you apply for a home loan from a bank, it usually requires a valuation report of your property. Valuations are done by professional property valuers, and the valuation fees they charge may vary. If you are using your CPF savings to buy a resale HDB flat, you will need to submit a valuation report by a private valuer assigned by HDB together with your resale application to HDB. The valuation of the flat is one of the factors used by banks to determine the home loan amount you are eligible for. Next, we consider the agent commissions. If agents are engaged to assist in buying or selling properties. The agent commissions payable by the buyer and seller are negotiable, dependent on the service level provided by the agents. For private property transactions, the buyer does not pay the commission charge.